Welcome to Beat the Street on this first day of March 2024 as we look out towards the start of the US session in 1 hour's time. We're looking for new record highs. Let's take a look at the headlines as we approach today's market trading on the cash session. And Nasdaq on the 24-hour markets on the IG platform have just now hit a new intraday record high. And tech remains the big money magnet, as was demonstrated late last night from Dell, which beat fourth quarter estimates in its earnings. And, well, it's all about AI. Sends a rocket up its shares, and the stock is up at the start of today's session in 1 hour's time. And Elon Musk has taken the OpenAI to court, alleging it's becoming a money-making machine. We'll get some more on that in a few moments' time. There's no breaking news in terms of numbers out in the next 2 or 3 minutes, but what I want to show you is what's going on with the US dollar ahead of the ISM manufacturing PMI data out a little bit later on today. We've got the fourth day in a row of gains for the US dollar. This vertical dotted line here was the last time the US Federal Reserve met to decide on interest rates. Since then, there has been a little bit of jostling on the markets as to what expectations are in terms of the next move. And it's now tipped that it's going to be June when the Fed next moves. And it will be a downward move. That's what the markets are anticipating. It's around about 53%, suggesting it's going to be a 25 basis point move on the way down. There's a few outliers suggesting it's going to be 50 basis points. But on the whole, the majority of economists polled and the majority of the market expects the US Fed to come with an interest rate cut at that time. And that is really, I think, what's fueling this rally. I'm going to show you this 24-hour chart on the Nasdaq. Let me show you what's been happening here. New record high intraday just earlier today at 18,124 for the Nasdaq. Yesterday, we passed and closed beyond the 18,000 level for the very first time on the 24-hour markets. And we do have a red candle at the moment, but I think we are indeed still up on the cash session, looking for a stronger start on from yesterday's close. And same sort of price action on the S&P 500, although that being said, we haven't seen a new all-time high, but very close to that 51.11 that we scored intraday back on the 23rd of February, this time last week. 5,096 is where we're standing at the moment. Again, a little bit of a red candle, bit of money taken off the table, but I don't think it's really changing anything in terms of the outlook. We've still got this rising line here. The longer-term picture is still up. I mean, I'd want to see a close below this sort of area down here at around about the 4,600, I think, to persuade me that we've got anything like any sort of a longer-term short opportunity here. At the moment, these pullbacks are just that. They're just retracements in what is otherwise a very strong market on the upside. Dow Industrials, just to continue the theme here of these markets which continue to punch higher, but at the same time, every now and again, you get these little pullbacks, and that's exactly what's happening here at the moment. We're down off from the 24-hour high close we saw yesterday, today at 39,973. So some interesting stock stories around to watch out for. But later on this afternoon, we get some economic data out, which may help us give a little bit of more of a sort of feel as to how things are going in the US economy. It's PMI data. PMI is really interesting because it looks towards the future, and as much as it indicates what purchasing managers are doing in terms of their demand. It's the ISM manufacturing PMI data out this afternoon. It's expected to rise to 49.5 in February from 49.1 in the prior month. That will be the highest level since October 2022, but also the 16th month in contraction. Anything below 50 indicates that there is this contraction in the economy, and this is for manufacturing, which is it's a very large part of the US economy, and it's an interesting number to follow. And it may well be there's an opportunity to trade these markets around that. I was talking about the dollar. I just want to quickly refer back to the charts and take a look at euro-dollar trade, because we have the outlook, including the European Central Bank interest rate meeting next week, which could be of interest. And we were talking about this earlier, about this band where it's trading. The level of support was given back on the 14th of February, down at 106.95. And the upper side of this is at just below the 109 level. And we're pretty much in the middle at 108.12 at the moment, and waiting on the ISM this afternoon. But I think next week we've got US jobs on Wednesday for private payrolls, the ADP, and then we've got non-farm payrolls on Friday. And that sandwiches the European Central Bank interest rate decision, which I think could well be an interesting disturbance for the foreign exchange markets next week. That big question of will they, won't they? When will they go? It depends on the severity of the cut and so forth as to what's likely to happen. But in amongst some of the other headlines is what's happening with these markets. Today there is this week there's been published a headline from The Economist magazine on its front page asking the question, how high can these markets go? Well, it's a big question, and how close are we to the top? Our guest for the next 5 or 10 minutes is Joachim Clement. He's head of strategy at Librum. He joins us now with some more and might be able to shed some light on this burning question. Joachim, welcome. We've been talking a lot about what's been driving these markets. What are your thoughts on where we are, the sort of price action we're seeing, and whether or not you're happy about continuing to back these markets on the upside?
Yeah, well, I think in the very short term, over the next month or two, I would be cautious about the US market and equity markets in general. We've now reached, again, very overbought stances in the US, in the Nasdaq even more so than in the S&P 500. I would say we are due for consolidation. However, looking further out, 6 months into summer or then into the year end this year, I remain bullish on US stocks and European stocks alike. The US earnings season that has basically completed by now has again been quite strong, not just in the famous Magnificent Seven and in the tech sector, but pretty much most sectors have seen earnings growth faster than in Europe and a significant amount of positive earnings surprises, all of which means that the underlying dynamics of the fundamentals remain intact for now.
How nervous are you about the market rally when you talk about the Magnificent Seven? Because so much weight has been added to these great behemoths in the market, the Apples, the Microsofts, Amazon, Meta, Google, setting aside Tesla, because I know that's a bit of an underperformer. But it certainly seems to me that there's a concentration here in too few stocks. The breadth is so narrow. Is this unusual given where we are with this rise in equity benchmarks?
So for the US, the market concentration is unusual if you compare it to its own history. In fact, I just updated my numbers this morning, and we are now at the most concentrated markets in the US in at least 30 years, as far back as my data goes. However, if you compare it internationally, obviously smaller equity markets with fewer stocks in them are more concentrated. So in that respect, the US is not unusual. However, what the unusual concentration of the US amongst those super mega caps means is that if they start to disappoint, if their earnings growth starts to slow down, that will have an outsized impact as well on the way down, as it does now on the way up. But as I said, for now, the way down is probably more than 6 to 12 months away from us.
Yeah. How sensitive are the markets and this market move to what the Federal Reserve is doing? So saying the markets, I think at the moment, looking like they're expecting an interest rate cut from the Fed by 25 basis points come June. If there's any hint from the Fed that that is not going to be the case, to what degree do you think this will be felt in the markets?
Yeah, I think what we've seen in January, February was, especially in the first half of January, a little bit of a consolidation on the back of markets being kind of disappointed that the Fed would not move aggressively towards cutting rates. I think most investors have always kind of expected the rate cuts to be in the second half of this year. This is what's now priced into equity markets. But if the Fed indicates that the first rate cut will not be in June, but possibly even in August or September, that would probably lead to a 5% plus correction in equity markets as investors readjust their expectations for the support that we all hope we will get in the second half of this year from rate cuts.
Let me just return to the charts if I can and bring up this chart of the dollar basket. Fourth day in a row of gains for the dollar basket. And of course, the best way and the most common way to trade this is what's happening with the euro dollar trade, which is the bulk of that dollar index, if you like. And of course, Joachim, when we're looking at interest rates, we've got to remember that the European Central Bank is also meeting on interest rates next week. To what degree is the situation slightly different there for the European Central Bank over the Fed? And could that disturb the euro dollar trade?
Yes, it could indeed lead to a weaker euro and a stronger US dollar in the next couple of weeks. And the reason why I say this is because the European economy is clearly in recession while the US economy is chugging along nicely. And that means that inflation in the Eurozone is much, much lower than it is in the US. And both wage inflation and inflation is trending lower faster than it is in the US. That gives the ECB room to cut interest rates, more room than the Federal Reserve has. And there's an outside chance that the ECB might start cutting interest rates before the Fed does. We, at this point in time, expect both the Fed and the ECB to start cutting in June, but it isn't out of the question that the ECB might already go in its April meeting. If that happens, that would obviously be very bearish for the euro and would probably move the euro-US dollar exchange rate towards a 105 handle.
Yeah, and just quickly referring back to the markets, I know we're talking mainly about US at the moment, but I do have to comment on what's happening on the European markets as well, because intraday today we've seen another new all-time record high on the German DAX. Same question about the DAX, the European markets on the European interest rate outlook. I mean, if the ECB doesn't deliver, again, are we looking for a 5-10% retracement, or what's your feeling in terms of where we are on the European markets?
Yeah, same thing. It's buoyed by the hopes for interest rate cuts by the ECB. But what makes Europe even more vulnerable than the US to a short-term consolidation is the fact that the earnings growth and the earnings season in Europe was actually quite a bit weaker than it was in the US. So in Europe, the businesses are reporting much lower margins, much more margin pressure because of a lack of demand. And if you then get rid of the potential support from rate cuts, that would probably hurt the European stock markets more than it would in the case of the US.
Interesting. We'll leave it there, but thanks indeed for joining us. Joachim, it's been a pleasure talking to you. Thanks for your time.
Thank you.
That's Joachim Clement. He is head of strategy at Librum here in London. Now let's move on and take a look at a couple of stock stories, both of which have hit the headlines in as much as what we're looking at here at the moment. Dell Technologies, it's worth looking at this stock at the open today, as the company unveiled revenue and earnings that forecast Wall Street estimates on Thursday evening. Dell shares rose more than 16% in after-hours trade. Let me just take a look at the numbers. Here we are. Earnings per share, $2.20. Expectations have been for $1.73. Revenues coming in just a touch stronger than had been expected at 22.3 billion. But in fact, it was the outlook that Michael Dell delivered in these numbers. 2024 revenue and earnings forecast above expectations. So Dell benefiting from a rising demand for its AI servers. Orders have increased nearly 40% sequentially, and the backlog has nearly doubled. Pipelines looking strong. All this is going to contribute to its profit in the months ahead. Dell expects revenue between $91 and $95 billion for its current fiscal year, the midpoint of which is above analyst average estimates of $92 billion. It expects annual adjusted earnings per share of $7.50 plus or minus 25 cents compared with an estimate of $7.15. So you can see whichever way you cut it, it looks good. Let's look at the share price chart. It doesn't trade all sessions on the IG platform, but analysts I was talking to this morning, yesterday it was up 16% in after-hours trade. It's added a further 4 percentage points, according to some analysts this morning. So where are we going to open? We're going to open at these levels up here. And the last time we were there was this high that we had in the stock all the way back in October 2021, where it was just a touch over where we're expecting it to open today. But certainly a gap up at the start is widely expected as we see Dell benefit from what we're seeing in terms of the moves on from those earnings and forecasts that we saw late last night. In among some of the other news headlines that we've seen, Elon Musk is, according to a Reuters report, suing ChatGPT maker OpenAI and its chief executive Sam Altman, among others, saying they had abandoned the company's original mission to develop artificial intelligence for the benefit of humanity, not profit. There's a lot of speculation as to why this has happened. It's reported that the lawsuit was filed late on Thursday. And it said that Altman and OpenAI's co-founder Greg Brockman originally approached Elon Musk to make an open source non-profit company at that point with Musk. That is just part of the report. The Microsoft-backed OpenAI has got its focus on making money according to this lawsuit, and that's breached the original contract according to the papers that have been submitted. So that's not a tradable story. It's just one of those stories, I think, that it's worth looking at as we see things in the markets in today's session. That's it. As we look ahead towards the start, we are at the moment looking for gains on the Nasdaq, although it's looking at as we speak, as though some of the gains we saw earlier this morning are now evaporating. But I think the bottom line is we're holding on to the recent gains, despite the fact we're looking at a mixed open at the start of today's trade. But do watch out for Dell in 40 minutes time at the beginning of the session. That's it from me. I'll be back at 4 o'clock this afternoon on the IG platform. We'll look ahead to some of the stocks to watch out for next week. I'll be talking with Tom Sosnoff from Tasty Live about his thoughts on where the markets are going, having hit those new all-time intraday record highs. That's at 4 o'clock this afternoon. Then again, have a good weekend, and we'll be back on Monday at 7:30 a.m. with the early morning call.